Welcome, Turson. First time here. Should have a good stream. Should be fun. Especially since we have a lot to talk about. I'm just setting up my stuff and we'll be good to go in just a moment. That's good. Coinalyze, and we should be good to go here. All right, sharing my screen. Yeah. All right, guys, we are live. So let me clean up my desktop over here. Closed. All right, you guys see my screen? Everything's good? We're good to go? Yeah, okay. All right, guys. So, Friday morning here. Had a pretty doozy of a week. Lots and lots and lots of price action to talk about. For sure, you guys have questions. For sure, you guys are a bit concerned. Probably your first correction for a lot of you guys in your first market cycle. Maybe for the veterans, probably nothing too out of the ordinary. Um, every drop will feel different, but more or less, when you just follow the percentages, it's doing exactly what it always does. So we're going to talk about that today. This will be my last stream until further notice. I'll be on vacation for the next 10 days. So this is going to be a stream that we're going to cover a lot of topics. We're going to make sure that for the next 10 days, people know what to do. And yeah, that's pretty much it. So welcome, guys. If it's your first time here, we usually discuss a lot. Primarily, we always start off with BTC, ETH, Sol, maybe some others, and then we kind of just wing it. So without further ado, since there's no questions, we'll move forward with the M15 on BTC. So to the right over here, I know people are going to ask me, this is a live tape. So left column is spot buys, middle column is all perp buys, and the right side would be liquidation. So we keep this on the side usually as a reference, is to see how the price action and its activity is going on. So with that being said, this is the Bitcoin's M15, and yesterday night I was in general chat while this was happening. This had to do mostly news correlated. I mentioned it in my corner. This is a news correlated driven sell-off. It felt more like a bear trap in hindsight than anything. But the news was real. To my knowledge, it had to do a lot with Israel and Iran, and something to do with drones and being shot down. A lot of people overreacted, myself included. For example, a typical setup that I would take on any given day, despite the news, despite anything. For some reason, I felt this wasn't ideal for me, and it costed me, right? It costed me pretty much a 4 to 5% move today. And to further stall on this, just another strong sign that the pivot in 200 EMA is acting as we should, and again, just another faded move on my end. Yesterday kind of fucked me up. I'm not gonna lie to you, human just like you guys. And I didn't like how we just so convincingly took out these lows. It spooked me a bit. So unfortunately, it sat on my hands, and now sitting in a bit of disbelief. For my intraday side of things, I like to think I choked these two clean moves, and that's troublesome for me. But other than that, back above 64,000, 60,000. If we look on the daily chart, this is what we consider the range lows, and as we could see, a lot of people most likely got faked out, myself included, with these lows getting taken out, thinking that our range is just going to break through. Reality is, this wick over here kept us alive. And once again, we trade above 64,000, 60,000, which has been a really fought for area. Again, make no mistake, we have to consolidate here before pushing higher. We have to come back and retest here. It got pushed higher, and once again, wicking into this on multiple occasions. We'd really, really like to see this hold. But yeah, this is a demand zone. This is how it typically responds, and when you're looking for bidders in the area, there should be responses. So we had a fake breakdown of a range, and now the most, in my opinion, the path of least resistance, is going to be towards 67,700, which would be considered a mid-range. This is where people are probably going to bail on ideas. But to reclaim 67,700 most likely means we go for the range highs. So just keep that in mind. On the daily time frame, things just kind of look the same, pretty choppy, nothing too immediate in terms of trends. So just keep that in mind. No need to force things. No need to rush. Let price do its thing. The intraday is going to suffer a bit here, but that's normal. We've had months and months and months of a single trend. There's no need to get impatient here just because of a couple weeks. Um, but yeah, looking at this M15, what I want to see today is if we're not going to clear these R2 highs into R3, then we're looking for something very, very simple and similar to what we look for all the time, which is going to be a pivot. 200 EMA is going to be around 62,850. This is where we're going to expect to bounce, or at least support to hold. We don't want to be falling through this again. It's going to look really, really bad. I'd really like to hold 62,850 for the daily, or the intraday, I should say. But that's my plan for BDC. Technically, we should be going for 66.2, 67.7. If the momentum's there, we'll definitely see it. Funding is still predicted negative. The premiums are less than 0.01. So I would say the favors in the bulls here. It's costly to short right now. It's costly. It's very costly. So keeping that in mind. That's my BDC M15. I mixed in some daily with you guys just so you guys know for the next few weeks. This is gonna print out, look distributive. Probably it's probably even gonna bleed out a bit, right? It usually looks like this. Make no mistake. Just look at how the market has treated these sort of bleed outs, and just assume this is happening again. Just assume that whenever you see this trickle out price action before a halving or nowhere near post halving price action, just assume that any bleeding out is going to lead to an expansive move. So keep that in mind. Today is the day of the halving, so we are on stream. We kind of timed it. We're about, I want to say, 9 to 10 hours away from the halving. It's a big moment. It's a big moment. It's my third one. Um, my first halving. Should I expect something intraday? I don't think so. I don't think so. I think a lot of people are putting too much emphasis on something that is meant to reflect more on a macro time frame than a immediate time frame. I like to think that you're fortunate to have hit price discovery before the fact. Usually, it takes quite a bit of time. I'm going to say that the halving is going to be a big nothing burger. A lot of volatility. A lot of people telling you that the halving has no effect whatsoever. And that's exactly the confluence we're going to need to know that we're still trying to price this in. So looking into that. The halving is going to be a nothing burger. The day of, it's just going to be a celebratory thing for the BDC maxis. But over time, that daily mine supply getting cut in half is going to hurt us, especially with the competition we have buying into the space. So keep that in mind. The halving shouldn't be anything you're trading immediately. It should be something that helps solidify or concrete. Is that even a way to say it? It helps you solidify and concrete your thesis going into Q3 and Q4. Okay. That's what I would be looking at it as. So with that being said, we look at Ethereum, which is looking to take some fucking speed here and get going. We have a nice response from the demand level, but unfortunately, we do not have the metrics that support a rotation or a play that considers a rotation. We would have expected a dump of this magnitude by now to have created some sort of rotation or capital rotation into secondary pairings, and instead, what we're seeing is more strength on Bitcoin dominance, and before the halving, that makes a lot of sense. After the halving, I want to see that go down a bit, just because I want to assume people are risk on and want to be speculative. So for that to happen, Bitcoin's got to cough up some of this market cap. It can't continue to amass more and more percent, because the higher it gets, the more ridiculous it becomes when Bitcoin jumps to 57, 58, 59, 60, for example. It's way past the half point now. So half of the market cap, if not more, aka to be specific, almost 56% of the market is in one pairing and one pairing alone, and that's troublesome for us when we're trying to build theses on projects, where there's millions of other projects, and that 40% or 44% of liquidity is literally trapped between 1 million projects. So naturally, you could see how that's problematic for us. What we're really looking for here is some sort of rotational metrics that will help us understand where we are in the cycle. And everything looks, as good as I think it would. Nothing out of the ordinary for me. We're expecting to push into 5660. I thought this would happen, just a week before the halving, maybe the day of the halving, and it doesn't look like the case. I think what's going to happen here is maybe a week or 2 weeks into the halving, we're going to continue to see dominance rise. And then that final blow off top is where we should really expect alts to start taking the lead here or start to outperform significantly. And again, after they've dropped so much over the past 2 3 weeks, we can only assume their reversion to be very very strong and sudden. So again, we're going to be paying attention to Bitcoin dominance. Any sort of large drop will most likely mean a stronger move for alts. So keeping that in mind, we'll take a look at Ethereum here as it grinds and falls and sits on this daily demand. with more room to go below us, but realistically should be finding a base here with the lowest exception being 2700. For a daily, this is how it's going to look. It looks kind of broken, the structure, and rightfully so. You have a high made, you have a low made, you have a lower high made, and a lower low made. So again, having this sort of down channel once again looks very very similar to BDC's bleeding out. And what's important here is as this 200 EMA catches up, 2700 is still being defended, and that's okay because it's giving a chance for the mean average to catch up, right? So that's what we're looking for. But there will be other factors that you're gonna have to look at, ETH BTC being one of them. And of course, as I'm trying to explain something, the tape just starts going fucking crazy. So just give me a second here. Every time I'm trying to teach something, they go and pull a fucking rabbit out of the hat. It's ridiculous. So yeah, ETH BTC is always gonna factor into this. Again, because its price in relativity to Bitcoin's price is going to play a huge role in terms of spotting out performers, right? And from what we can see, these lows have been taken out. These lows have been taken out, and it's really hanging by a thread here. I'm convinced, that this looks so bad that it's good. But at the same time, I have nothing to suggest that money will flow into this suddenly. So I'm keeping an eye on it. But realistically, man, I expected a bounce from now. I'm being totally honest with you guys here. Even a level that should have been defended now gets rejected multiple times. It's quite interesting. It's quite interesting to watch. But on an intraday time frame, before I get you know off topic, the M15 for Ethereum kind of looks very very similar to Bitcoin in the sense that it has an area that should have a pretty large response, with the exception of this bulk of bids here. So between 3,000 and 2980, realistically 3036 to about 3025 should be the area we expect to bounce, with the exception of a loss no lower than this, right? So technically the play should be like something like this if it wants to wick and then continue up. Like this should be the bulk of bids that defend this area, but realistically the entry should be 3036, targeting R1, R2, R3, maybe R2, be given how strong this is sold off. But realistically the pivot 200 EMA setup here works out. That's what it is. This looks pretty good. You have the 200 EMA creeping underneath the pivot, which provides a mean bid bulk sort of thing, which is what we look for, right? And as you can see, getting a response already. So ETH should technically bounce from 3036 to about 3025, with the exception down to about 2980. Shouldn't see lower than that if this setup's going to work out. We've already priced in all the FUD of the Iran-Israel stuff. We've actually closed above it, and realistically that's pricing in full V reversal on this news. So I don't think the war conflict has much to do with this right now. BTC now bouncing off of 64,000, which is the top of this demand block again. Dove into it on multiple attempts. Now to sit above it would be a good sign for us. So I covered BTC, I covered ETH, both on a daily and an M15. We can start talking about my bags that we've picked up over the weeks, or over the past week or so, or we can take a look at other charts. I mean, you guys know how this stream goes. We usually talk about the two majors. We try to get a feel for that, and then we start bouncing off into other things and what makes most sense. I think I'll start with Solana, just because I think it's one of the better pairings we picked. As you guys know, we had 3 scenarios on this. I've since deleted scenario 1 and scenario 3 because I don't believe them to be feasible anymore. So far, it looks like scenario 2 is the one that's working out. We got a fucking perfect allocation here. And had we traded on futures, this wick would have taken us out. So I'm very, very glad we didn't do that. But as things stand, we have a buy-in from pretty much 134 to about 125, averaging in around 129, 130. And price sits at 143 now, which is a nice cushion. It allows us to gauge the trade, and being 10% up is good. But it's not what we're looking for. If I was in the business of trading 10% pumps, that would have been where I was 4 years ago, and that's no growth. So trusting my system more and my ideas, I think this little consolidation chop that you're going to get from a very important level will eventually end up higher, and to sell here is just, in my opinion, just mistimed or miscalculated. So we're going to see how this works. But so far, Solana continues to do exactly what it does. For the next couple of weeks, expect prices to kind of just bleed out. Whenever you have a good idea, it's never usually just gonna immediately teleport like this. It'll probably come test the lows a bit, the conviction of some buyers, and then finally want to take off. There are other scenarios that we can consider, which is unfortunately this 106 to about 98 zone. If I'm not mistaken, it should be 106.98. 105.98, right? I have allocations here as well. Again, I have no problem just sitting out and watching this do this before it does this. Again, it's a spot allocation. It's going to be around a 3 to 4 month wait. So if we do manage to get 105 to 98, don't panic, don't freak out. Put an allocation there, and if you're bullish for the long term like me, or if you're bullish for at least the next 2 quarters, these should be the areas that have interest to you, and that's what I'm sticking to. So for Solana, not much we can do. We just got to wait for it to play out. Obviously, we'll be able to rejudge prices as it approaches 172. If we manage to get that fast enough, we might, if we're seeing weakness, might look to just close out here, because that most likely means we're getting a retest or potentially even lower, right? So we're going to regauge as we get back to 172 if we manage to get there in a short amount of time. Because the way we assume this is, if price wants to trickle and bleed like this, it's healthy. If price wants to immediately V reversal back up, it's most likely a bearish retest, and there's no point round tripping, going to Dubai back and forth. It makes more sense to spot clear weakness and hedge up. And if you manage to get this or even a drive lower, well, you know, it's an easy play again. So that's what we're looking at. If it's a fast, sharp, sudden rise, I see it as a bearish retest. It's probably going to reject these highs, give me another chance to load up lower. Why leave money on the table? That's going to change the way we look at it. But for as it stands, Solana, that's my 1 day outlook. That's my idea. That's my plan. And without further ado, if anybody has any questions on this, I'll answer it. If nobody has any, we'll move on. The indicators I'm using, this is a pivot point standard, pretty self-explanatory. You go to indicators up here, you write pivot points standard, and these are my settings. You set them to Fibonacci, historical pivots 1, yada, yada, yada. This is a volume oscillator, an FSVZO. It's a fancy one, but it's just a typical RSI. This one's a paid indicator to my knowledge. I'm not sure you can get it for free. But a good one nonetheless, helps me a lot. And this is a Q200 EMA, a 200 QE EMA, so it's slightly different than the 200 EMA. It's more fixed on the volume of the index I'm trading, so it's a slight proprietary to it, but realistically, any 200 EMA should do the job. But yeah, if you guys want to see the upper left corner, these are the indicators I use: the pivot, the Q, EMA, and the volume candles that you see right here. Then we use other fancy tools. I don't know. How advanced you guys are, but we start using like live tapes like Okotoki. And they gotta fix this. They gotta fix this. I don't know why I can't see my tape anymore, but that's really frustrating. That's really frustrating. We're gonna have to contact support soon. So that's Solana. If anybody has any questions on Sol and my bags on Sol, now would be the time to ask before we move on. All right, no questions. Moving on. INJ. This is another plan that we had discussed. As it stands, it does exactly what we needed to do. Albeit we kind of misjudged. I think we misjudged all our ideas, in the sense that those capitulation wicks were a lot deeper than I thought. So I'm really happy. We just stuck to a spot allocation. We didn't oversize. We didn't overtrade thinking it was the bottom. We just allocated, and now we let price do its thing. Is my screen frozen? Can you guys see my shit moving? Okay, cool, awesome. You aim for a few percent. What are the meaningful bag sizes? 1K plus. It's whatever. Okay, there is no right answer to this question, and the sooner everybody learns this, the better it's going to be for everybody. Everybody has their own risk tolerance. Everybody has an amount that they can allocate, where if they go, hey, if this drops like another 20% in the immediate short term, I don't give a fuck. If you do not think like that with your bags, you're doing it wrong. I'm sorry to tell you, but you're doing it wrong. Emotions will get the better of you. You might get lucky once or twice or 3 or 4 times, but on a long enough time frame, you're going to be completely stuck in your emotions. So when I am telling you an allocation, it's something I can chuck at a project, and if that were to go to zero, I wouldn't give a fuck. Like that's my mentality on this. This is my risk tolerance on this. Meaning, if it were to be my stop loss on a futures trade, it would be the same amount that I had allocated to this idea. Does that make sense? It's not about staying humble and patient. It's about using something that won't affect you emotionally. Because how are you supposed to make decisions when you're panicking, right? How are you supposed to be a leader of your portfolio if you're too busy panicking because you oversized, you overbet, and you aren't so sure about where this is actually going? And that's important, right? Because it changes how you look at a plan, how you look at an idea. When you're oversized, everything that goes against your position immediately will feel like the end of the world. And that's unfortunately where people feel compelled to make big mistakes. They make mistakes because they're oversized and they make an immediate decision on something they have conviction for 3 to 4 months on. Doesn't make sense now, doesn't it? It's actually quite irrational. You know, I'm going to make a decision because I'm panicking right now, even though over the next 3 months I have positive outlooks on this. You get what I'm trying to say? It doesn't fit the narrative. So when you speculate and when you allocate, when they say only afford what you can, when only risk what you can afford to lose, it's a golden rule. The reason for that being is it's not because people don't want to take financial responsibility for your mistakes. It's because you won't be able to manage the idea if you're oversized. If you're oversized and using too much money, there's nobody that will convince you your idea is good when shit hits the fan. So keep that in mind. It's not because people don't want to be financially responsible for you. It's because they know and we know what it is to oversize a good idea. You want to know what sucks about oversizing is that you could have bought, okay? You could have bought 10K here, right? You could have bought 10K here in about a couple months. This thing could probably appreciate 30-40%. You'd walk away with a really really nice payday. Instead, no, this has to be the bottom, this has to be the bottom, and instead you 10 times your size. And because these wicks over here you didn't anticipate for, all of a sudden you're backing out of the idea, you've lost money on the idea, and then 3 months later you get to watch this thing rip to 150%. And then you're like, oh, but if I just held my thing. The problem is it's oversizing. If you weren't oversized, you would have just been like, okay, let's just see how it goes. So keep that in mind, right? When we talk about spot allocations, for me, my risk tolerance and everything I do, this could go to zero tomorrow. And I'll just shrug my shoulders and be like, oh, another bet is lost. On to the next one. So unless you're feeling and looking at it like that, you will never approach the chart the same way as me. So again, it's context to what I'm buying and context to why I'm trading what I'm trading. Um, Again, we had an allocation and we started buying as high as 31 all the way down into 25. If I was oversized going down to 18, I would have thought my idea was wrong in the moment. Instead, I just sat tight and said, look, this is volatility. It's unpredictable. This is what happens. This is why people oversize and capitulate, is because they don't understand volatility. And the truth is, nobody does. Nobody does. When volatility is acting like that, there's nothing you could do other than just sit out the storm. So when you have a liquidation or a stop loss tied to that volatility, you're completely at the mercy of the market. So it's important to understand how to allocate. And in this case, we made a very very fair allocation, fair enough size for me to walk away 3 4 months. If it does what I need it to do, I would consider that a great trade, and that's how everybody else should see it. A win is a win, and that's how it should be applied. So again, we're expecting some chop, we're expecting some indecision, but more or less overall, this is going to be the bulk and base of our bids. Things can change very, very south. For all you know, the end of the world could be tomorrow, and we reject off this 200 EMA, and I consider it a lost idea. That's just trading. Welcome to the world. Welcome to the NFL, rookie. That's what they say, right? So this is my spot allocation idea. I would say we're more or less at a break even position now, being average between 31 and 25, 28.5. I can't really complain. It's doing what it has to do. But had I sold in the midst of everything and panicked, my 25 to $31 buys at that time would have been a losing position. And instead, just sitting it out, waiting it out, letting a valuable area do its thing, you might be able to weather the storm, right? Because there's a lot of people that are convinced the bottom is in, but are not going to back it up. So just keep that in mind. I hope that opens your eyes a bit. Does anybody have any questions about what I just spoke about on INJ? I mean, look at the way I drew it. Do I expect price to go up immediately? No, I'm expecting price to retest because that's how you find value. So if um, there's any questions regarding that, I'll answer them. For now, I'm going to answer someone's question from Sarfra. How do you find coins for intraday trade? There are a number of ways to do it. When things get a bit crowded, I typically switch to the spaghetti. So ciao buongiorno. This is the spaghetti, and this helps you. Okay, so Spaghetti is a visual, naked eye visual to help you spot what coins are outperforming in comparison to Bitcoin, right? So Bitcoin you see down here, um, Bitcoin you see down here with its more or less gain in percentage, and then these other pairings, these other indexes are how well they've performed in the same time frame. So a spaghetti is a way to tell which intraday charts are worth trading, which intraday charts are worth looking at. This is going to help you a lot. The spaghetti chart is definitely going to help you get at least a naked visual from the start of your day. Then if you want to make it more complicated, you start going into the volume 24-hour turnovers, and the ones with the highest turnovers are the ones with the most volume. The ones with the most volume means there's the most volatility, and the ones with the most volatility means there's the most traders. So when traders are at the table, that means prices are moving. That means people are taking setups. That means people are bidding and selling certain areas. As a trader, that's what you're looking for, right? You don't want to be trading a liquid trash that doesn't go anywhere, that doesn't do nothing. You want to be trading volume because as a trader, your job is to trade volume, right? Identify the trend, identify the volume, stick to that trend with the volume until it disappears. Move on to the next one. Like you're counting cards. If you're at a cold table, you're not betting max, right? You at a cold table, you're not betting max. If you had a hot table, all of a sudden you're taking bigger hits, right? Fair enough. Makes sense. So spaghetti, coinalyze, and whatever index or centralized exchange that you trade, whichever one that has a 24-hour volume turnover is going to teach you a lot. Um, Sorry, guys. Yeah. All right. So I answered that question. Um, Took a look at Sol, INJ, BDC, ETH. What else did I have an idea on? Why can't I remember it? I had OXO and I had. I can't remember. Looking. Yeah, it's this OXO, right? That's the only one I have. Yeah, let's look for it. OXO. Can you go over how to open space? It's a template, so I would have to send it to you. You have to make it yourself. I'll send it to you. OXO, and then we'll move on. Okay, just the last of the bags that I discussed. As you guys can see, you have a scenario 1 and scenario 2. Guys, self-explanatory. By now, you know how I tag demand boxes. Very, very similar to Solana's setup. We're expecting a bounce from here. If it's sharp enough, we consider it a bearish retest. We're probably going to sell, probably target lower. But if we do manage to get this before even getting this retest, we're buyers here as well. We're just allocating spot into these two levels, and we'll take a look at it in a few months' time. No need to panic. No need to freak out. Everything does exactly as it should. It looks pretty good. I'm not gonna be the one to fudge you out here. If it's a sharp enough retest, we'll consider it bearish. We'll consider this area to be the sell point. And if we get this lower, that's, I think a 60-70% drawdown, 60%. Yeah, it's beautiful. So that's what we want. We're buying 30 to 40% drawdown and 60 to 70% drawdowns. I don't think we can get a better entry on the chart if it's bullish. If it's bullish, I don't think there could be a better entry on the chart. So keeping that in mind. You want me to take a look at other charts? We'll do that in just a second. If last night's fear of World War III wasn't enough to get us a bigger deviation of BTC range, low 58K or so, do you think we'll get a sweep of the low? I mean, where would the sellers come from? That's an interesting question. We all know that whatever GBDC is outflowing in the hundreds of millions cannot persist perpetually, and that goes the same for anybody that has large holdings or spot holdings, which is why it's very, very important we take a look at the futures data here, which is constantly creeping negative, assuming a lot of people are hedged on paper. And what does that mean? In a perfect world, oh, my mic cut off there. In a perfect world, okay? In a perfect world, right, where you're in a market that's controlled and has unlimited supply, it's very, very easy to distribute and create a market in that sense. When it comes to Bitcoin, unless you have the spot collateral to make up what you're promising to buy back, it's a recipe for disaster on a long enough time frame. You can ask any single person who's ever opened shorts on Bitcoin how dramatic, disgusting it is. And I'll tell you a story. I don't know if people were around here for this time, but do you guys remember this? Oh my God, we're going way back, brother. We're going way back, my friend. I don't know if you guys remember this, but I think on the Binance index, someone got liquidated. Okay. Let me actually look for it. Just so you guys know how scary it is to actually open shorts. Like I need you guys to actually know this because it's terrifying. It's fucking terrifying, bro. Um, bro, what the fuck? Where is it? Where's that wick, man? I can't remember where it was. I can't find it. Anyways, there was a day where a guy on Binance got liquidated for like 600 mil because a candle went from 28K to like 42K in one candle. It was something like that. I know I'm getting it wrong, but it was something like that, right? Am I crazy? I know it was around here. Binance US, that's what it was. Okay, never mind. Binance. If it's Binance US, then that doesn't serve my argument, so forget it. All this to say is when you do not have spot collateral to make up for your paper buys, what does that tell a market on the opposite side of you? That if we push price high enough, they're going to be forced to buy back, which is going to send price even higher, which actually makes me sell on that. Do you get how that works? So when you're seeing short interest build up like this, and how do you know short interest is building up? Because perpetuals, right? They balance out they balance the market by providing an incentive. This incentive either gets paid to the longs or gets paid to the shorts. So when a market is naturally imbalanced, for example, there's too much short interest, the market starts providing incentives for people to take the long. So when you have a halving, right? When you have a halving, and what that technically means is the supply of this moving forward, whatever's coming out moving forward after this day is getting cut in half. Whatever gets rewarded to miners every day is about to get cut in half. When you're being told that, hey, we'll pay you to take a position on this asset, to most people, that's a no-brainer, right? They'll just continue to buy up on perps and collect that incentive. Very, very similar to my 2020 long at 10K, where I was just getting paid negative funding to buy price that was going nowhere. Because what was the cost of me holding something that's not going to go down in price, and what benefits do I get from it? It's getting paid funding for people that were selling in an area that provides no incentive to sell. So realistically, when we look at these funding rates and we see them in the negatives at $60,000, it's indicative of me that most of these market participants are not as long as you think they are, which indicates more or less that this entire push has been spot organic. There's nobody inflating price with collateral, sorry, with margin and leverage that they don't have like they did in 2021. This is actually quite organic. It's as organic, to be realistic, to be completely realistic, it's as organic as the run up from 10 to 20K in 2021. It's as organic as that in 2020. The rates are the same. They are the exact same, which means that the market, in terms of futures data, is as offside as it's ever been to the upside. You get what I'm trying to say? In order to collect funding, it's whatever. When I collected funding on the 2020 long, it was 3x, 3.3x, if I'm not mistaken. So whatever position I had, 3.3x, I was getting a paid incentive of that. Right? But it was months on end. I think we got negative funding or flat rates for at least 2 to 3 months. That's a lot. It's not fluctuating like it is now between positive and negative. Every session is just no. It was negative and flat, or at least 0.01 for the whole run up. Like it was very very cheap to get long going into the halving, and at this moment in time, it seems to be the same case. It's very very cheap to be long here. Going into a fucking fundamental bullish event like this, I can't stress that enough. If you're bearish here, I'm not gonna say because stranger things have happened, but if you're bearish here for the long term, realistically, it makes no sense. That's all I'm gonna say. If we reference every post halving event up until now, your bet would be severely odds against you. So just keeping that in mind. Do these slowdowns and inflows for IBIT concern you at all? Not necessarily. Not necessarily. 70K to 100K is going to be the most fought for area of Bitcoin in its probably recent history, trading at levels in the 5 digits or higher. It's after that where everybody will admit defeat. It's the 70K to 100K areas where a lot of people are going to be scared. You have to also understand it's where a lot of people held from previous cycles that are being offered life-changing money to walk away. And that's obviously going to create a lot of shuffling. It's going to create a lot of bag switches. It's going to create a lot of transfer of wealth. And you can't blame people for wanting to sell 70K BDC. Some people have been holding. How long have I been holding now? It's almost 8 years. And it's like I still don't think we're there. I still don't think we're at the price that makes sense to truly sell. So again, there are people that will feel like that said, "Yo, I can't take no more. I'm paying myself one BDC out, and I'm surviving for the next." A couple thousand people decide they want to do this, and all of a sudden you have a distribution, right? So what's important to understand here is the fundamentals of Bitcoin, and what's carrying the narrative forward is that at one point during these ETFs, BlackRock was buying 2 to 3 times more than the Bitcoin that was getting mined before the halving. So if you were to take those same numbers, and we're not going to extrapolate, but if you were to take those same numbers, that at the rate that they were buying with the new halving coming out, that's almost like they're buying anywhere between 8 to 12 days worth of mined BTC supply. That's unbelievable in reality. Like, if you guys understand how much of a fight, a dog fight, that will be in the future. It's like, you can't be bearish on something like that. It realistically makes no sense. So um, for the intraday stuff, you might get chopped around, you might get tossed around. Just remember to stick to your long-term convictions. I haven't seen anything that's truly changed this narrative yet, or I haven't seen anything that's truly changed the trajectory of this, right? And a couple of people launching drones to each other is not going to change this for me. If anything, I like to think that in the light of global conflict, something like BDC, gold, etc., will start to actually perform better, and everything in between is considered an overreaction. That's my honest opinion. So let's keep a straight head on. I know how quick it is for people to change their tune. You just got to look at this for what it is. You've had, holy fuck, it's been spoiled beyond belief. You've had a year and a half of the straight up, like actually just straight up, like with your occasional tricking out and bleeding. It's the same thing. It's the same thing again. Like just because you're a bit deeper than last time doesn't change much. Everybody gets way too emotional over here. It's unbelievable. It hasn't done anything different as of yet. What is the BDC top for me this cycle? I don't know. I don't know. I don't know. I'm going to be conservative, and I'm going to say it stops. I think anywhere between 100 to 150K. Um, that's being conservative, like extremely conservative. More optimistically, like if 70 to 100K doesn't take as long as I think it does, then my honest predictions are 200K or more. I'm not trying to be a moon boy and get you guys excited, but the reality is the real fight for Bitcoin right now is 70,000 to 100,000. There are just an overwhelming amount of sellers in this area, whereas 100K to 200K is practically thin fucking air. Do I have a reason for 100K to 150K? Not necessarily. I think it's a 1x, 2x. Every halving, I like to cut my expectations in half. So if my last halving at 20K highs, the high was 70K, I'm going to assume that a 3x of last cycle is somewhere going to be towards a 1.5x this cycle, right? So anywhere between 100 to 250K, I'm going to say really. It all depends on 70K to 100K. If we manage to overwhelm the selling in 70K to 100K, 100K to 200K comes extremely quickly, like extremely fast. I don't think anybody understands what happens at that point. It is literally thin air above 100K. And if we go to around 200K, 250K, it's more in line with my 3.3x, which is fair enough for a halving at this point in the cycle. But that's my honest opinions. Don't don't take it. I just know in about 3 years from now we'll be crying and totally depressed that Bitcoin sits 80% down from its highs at 60K. That's one thing I will tell you as a mathematical certainty that in 3 years from now everybody will be crying that Bitcoin's at 60K lows. Do I have any idea or thought on how long this bull cycle will last, or is it too early? Um, the halving, realistically for me, is the halfway point of the cycle. In my opinion, the pregame is over. So whoever made their money in the pregame, you can consider yourself smart money, because most people weren't paying attention for this entire run up. That I call pregame. Now it's post halving. Now things will start flying. At least based on traditional news, or not traditional news, but traditional data. Everybody just starts to get excited. Everybody just starts to believe that nothing could ever go down again. So I would say that's pregame is done. Matic is 65 cents right now. Do you think we can get it to $3 in my first bull run? Everything I expect in projects, aside from the ones I've spoken about, I think there's going to be better opportunities. I still think a lot of these alts will perform very, very well, much better than where they're trading at right now. But I'm really, really focused on the new pairings coming out because those are the ones that are going to grab excitement and attention. Do you think there will be a big retracement after the bull market? Every time, every single time. It's not a market if there's no cycle like this. I haven't been in a market environment that has not given me a full bearish cycle followed by a a bullish cycle. I have yet to see that. Don't you think ETFs and pressures from miners will affect this halving compared to the previous? Bitcoin is not affected by anything. If you're gonna buy, you're gonna buy. You're gonna run out of money. If you're gonna sell, you're gonna sell. You're gonna run out of coins. All I know is my supply gets cut in half every 4 years, and we continue to trade at the price people are willing to buy and sell it for. This is the most guaranteed fundamental that money has ever given anybody ever. So to be bearish on that alone is just crazy. Or to think it has any effect whatsoever. That like immediate money in the short term affects its long term destination. It's that much of a certainty. Like that's how confident I am at this point in my life. So like anything in between is all mumbo jumbo. Do I think ETFs will have a pressure to some extent? Yes, I think they're going to add a more competitive buying a buying side for sure. They've provided avenues for less savvy crypto people to get involved. So absolutely, yeah. Yeah, short term, but at this point, do we really care? Are we really going to judge a long term conviction or a long term fundamental catalyst for a short term price action? I don't think so, my friend. I don't think so, my friend. We're not too concerned with Gaga Boo Boo, Fear 1 2 buckle my shoe, headlines. We really don't care. What will be my exit strategy when we see hyperinflation? For Bitcoin specifically, when it comes to spot allocations on alts and lesser conviction bags, we're gonna judge this on a time base. So I'm gonna give myself a 3 to 4 month window to see how they perform. But in terms of BDC, when I can buy a house with 0.01 BDC, then I'll finally sell. Till then, there's just no point. Thoughts on the Fed possibly delaying rate cuts? Do we even bother trying to guess about this, or just wait to hear the decisions from their own mouth at FOMC? We have data and metrics to suggest that the Fed is completely coping in the fact that they said they can lower rates this year. We do see that things are more expensive. There's no doubt about it. So the Fed is going to be forced to change their tune, which is again why I've been saying for the past 2 years that the Fed has truly lost all their credibility and integrity. So anybody that actually takes their meeting seriously is just listening to someone that is that of a 6 year old child, right? They want to play with one toy for 5 minutes and then 20 seconds later they drop it after making the biggest fuss about something. 20 seconds later they're on to the next best thing after leaving a mess. That's the Federal Reserve right now. It's like talking to 6 year olds, right? So they say one thing, they're obsessed with this for 5 minutes, and then the next month everything changes. So the Fed has lost a lot of its credibility and its integrity. It's more and more looking like they have no idea what the fuck they're doing. And again, For TradFi, this might be scary, but for people that are betting against the traditional system, more instability in the traditional system is only going to spell good news for crypto down the line because it's a competitor, and a competitor is providing you better solutions against inflation by cutting its supply in half every 4 years. So while the Fed is telling you that they have to keep rates high and make everybody suffer even more, Bitcoin's saying, hey, look, all you holders out there, thanks for holding it so much and thanks for being a part of this. We're cutting our supply in half for all future rewards. So now the things I'm holding aren't depreciating in value; they're actually going up in value. So realistically, does a Fed rate cut really matter? I mean, if you're expecting people with borrowed money to jump in to save your market, then yes. But if you're expecting just raw organic buyers to hold the price down like they've been doing from 20K to 60K without a spot, without a leverage incentive like this, then does it really affect us long term? I don't think so. But you gotta, you gotta rationalize and you gotta brainstorm like this a bit. Like realistically, in the short term, yeah, sure, people are gonna panic, they're gonna get scared. It is what it is. There's just a constant nibble of spot buying on something that's continuously choosing to grow more and more scarce. The wallets that have accumulated for the past 6 to 8 to 10 years are not diminishing in size; they're growing in size. So it's becoming more and more and more competitive. We could have been having this conversation 4 to 6 years ago, and I could have told you owning one Bitcoin was a very, very reasonable thing to do. Now, I can't tell you that. We sit at $60,000 as the price to enter now. That's more than people's salary in 2 years after saving, after taxes. The price for entry is just getting more and more further away. So again, like try to ignore the noise in the middle. Try to ignore the noise in the middle because they always feel like you have to sell at some point. When in reality, the bar just continues to get raised over enough time. And that's just the reality. Don't be swindled by this. Don't be fooled by this. Ask yourself if the $10,000 you had 4 years ago, would you have been able to buy way more BDC than the money you have today? If the answer is yes, then try to focus on that a bit more. Did I print in the bear also? I retained the large majority of my net worth, which is the most important thing to do in a bear market. Suffer the least amount of drawdown as possible. I'm not going to bet on growth and extraction when the market is suggesting anything but, right? It's my job as a player, 7, 8 years in with the portfolio I have in a position something to lose. I don't feel the need to excessively risk. I play defense. I play defense because I'm in the lead. Like I don't need to do a three I don't need to do three center backs in the back and put all my midfielders on attacking. Like I don't need to go ultra attacking here. Do I leverage short and bear? Why would I do that? Very rare. It's very rare. Welcome to the real life of a real trader. There are shorts. Like there are shorts. Like I'll tell you some really obvious ones, right? Like really obvious shorts are mostly on alts. They're mostly on things that are super diluted, super amount of rotation in project tokens, and most importantly, have distributive cycles. Meaning, what I'm trying to say is they have token unlocks, VCs just dumping on people, right? Those are sellable tokens, and those may as well be a hot bull market in reverse, right? So there are absolutely plays that you could take in bear markets that are as obvious as they can be. What's important is you play the right pairings because there are pairings that are just not worth your time. How much BDC would suggest someone holding their long-term percentage and also 5 to 10? Dr. Rosen, if you're a traditional investor, a traditional speculator, for speculative assets, something, for a speculative part of your portfolio, for something that's usually around 5 to 15%. So if you're comfortable with those numbers, I think that's going to be fun. This is just traditional value investing. Um, 5 to 15% is where I speak to most people. That's what their tolerance is usually around. Yeah. What do I think about AVAX? This is a project that I think has had its moment in the sun, so I don't have too much interest in it. Do I think it's good? Maybe. But when I see a chart like this, I see so much obstacles in between. I'd rather focus on something completely new, fresh, quote unquote proprietary, new tech, whatever the kids are talking about these days, because that's the one that's just going to move quickly, lower liquidity, easier movement. Bit of a different topic from BTC. Looking at gold right now, looks like a blow off top forming. Big sell volume on H4 and D1 combined with various. I can have a look for me and give me your. Uh, what's the ticker for gold again? Can I just do gold like this and I'll get it? GC futures. Yeah, okay. What are you worried about? It's an all-time highs. This thing's an all-time highs during arguably the most inconsistent, uncertain times of our life. For gold to be rallying here is probably the most fitting of the times, in my opinion. The reason why gold has corrections down is because gold is meant to act as a fear hedge, right? So when people start getting scared, war times start to arrive, and uncertainties start to amount, price rises in anticipation of this. And once it's all false alarm and everything's good, everybody starts going out of gold and back into speculative vehicles, right? So try to see it that way. Whenever gold typically has that correction is because the fears are done being priced in. Yeah. How to find a crypto life balance. Crypto takes up all my time. Can't go to the gym also. Zombie, you are the master of your own domain, my friend. So um, I used to have this problem a lot. I used to have a full-time job 4 years ago. And that took up a lot of my time. So 10 to 12 hours a day. Um, I worked out 5 times a week. I did my meditations, my reading. The only way to do it is to wake up earlier. I'm very sorry, but you got to eat shit a bit. I'm sorry. Like it is what it is. Build a routine for yourself that nobody can get involved. Like the one thing I loved about waking up at 4:30, 5 in the morning was that from 5 to 8 o'clock in the morning, I could do whatever the fuck I wanted without a single interruption. So I would have my time for my charts for an hour. I would have my time for my meditation, my reading, my winding down, and then at the end of my workday, I'd go to the gym, come back home, fall asleep, do it all over again. So like, if crypto's taking up all your life, you're doing it wrong. Realistically, create a routine for yourself because we're not trying to quit our 9 to 5 to go work a 24/7, right? And you'll watch the discipline and you build when you're up at 5 a.m. and the only thing you can really do is get shit done. Like you'll see what I mean. Like anybody who's been up at 5 a.m. for consistent amount of time understands what I'm talking about. 5 to 8 a.m. Nobody's awake. Nobody's doing shit. So the only thing you're really gonna do is either go back to bed or actually get stuff done. So I used to create myself and lock myself from 5 to 8 to do things I actually had to do. Nobody was gonna bother me, and before you knew it, you got everything done quicker than you thought you would. So just keep that in mind. But yeah, as for gold making new highs, nothing you really talk about here. I've seen more bearish things, that's for sure. Build a gym at home if you can afford it, and if you have the space for it, why not? Can you explain how to use spot and perps window on the right? Well, it's just indexes, right? So these are spot indexes. So anything that comes up as a large order is going to appear on this left column. The middle column is going to be all leverage. So anything to do with futures, perps, these indexes are going to show up, and these are liquidations. So as you can see, these are forced buyers, forced sellers. You sleep at 2 a.m. because of crypto? You're gonna have to balance your life, my friend. Again, when man-made things start taking up your time, it's up to you to remanage it, right? Thoughts on possible meme coins like WIF? What would the chart look like? I the thing is about memes is like I can't give you a fundamental or any sort of technical thing. It's a meme, bro. Like it's. Let me take a look. I mean, I've seen worse looking bottoms. Low made. I higher defend. Take out these highs. This probably teleports to here. I've seen worse. I mean, get above 307. Get above 307. I'm gonna feel a lot better about this, in my opinion. I think if you get that, you look good. But that, guys, um, I think we're gonna have to end this one off here. Again, I have a vacation to prepare for. I'm traveling all day tomorrow, so I'm gonna have to run some errands now, get my last shit done. But yeah, guys, for the next 10 days, it's going to be much harder to get in touch with me. My updates are going to be a lot more minimal. It's the first vacation I take in like 8 years, 10 years. So we're going to Barbados. So again, I think it's about time to unwind. Yeah, I think it's about time we unwind, and I'll do my updates, but it's gonna be a lot. Yeah, it's gonna be a lot harder for me to actually update. So St. Vincent isn't far from Barbados and totally worth the trip. I'm gonna take a look at it. I've never been there. I don't know what to expect. I haven't been to the Caribbean yet in my life, so yeah, it's gonna be interesting. I promise not to leave you guys hanging there, but naturally, it's going to be a bit more difficult. So guys, with this last stream, I hope I covered up enough for you guys to keep you in going into the next week. Try not to panic. Try to look at things rationally. Um, Take this off time to study your notes, where you went wrong, what you could do better for the next time. Use your time. Use your time. Do everything you can. If you can't trade, doesn't mean you can't be doing something to make you better, right? Um, so keep that in mind, guys. With that being said, I want you to all have a wonderful, fantastic weekend. And as always, if there's any questions or anything of the sort that you guys will need to ask me, as always, um, I'm all ears. Just send me a message at me in the chats, and I'll make sure to get back to you. But guys, thank you so much for joining in. It's been a pleasure, and I'll see you guys not next week, but the following week for our next stream. All right, guys. Thanks again, and I'll see you guys later.